It's Friday in the garage, and here is your 2-minute market drill. Bitcoin sits around 90,600, parked right on the fault line between healthy correction and real trouble. Ethereum holds near 3,100, showing more backbone than the headlines would suggest. Solana hovers in the mid 100s at roughly 136, still trading like the turbocharger on the whole crypto engine. Under the hood, the story is simple and dangerous. The big liquidity buffer is gone. The cash parking lot at the central bank is basically empty. The Treasury is hoarding close to $1 trillion, and every new bond auction now pulls real fuel out of the system. The crowd hears rate cuts and thinks easy money. The plumbing says drain tank and hidden air pockets. On the crypto side, flows look ugly, but structure looks strong. Spot exchange reserves for Bitcoin sit at multi-year lows, but exchange-traded products have seen meaningful outflows and nearly 300 million in liquidations. That is how bull markets reset. Weak hands forced to sell into long-term scarcity. One calm session of neutral flows, and Bitcoin can snap 5 to 10,000 higher before most traders even log back in. Ethereum is quietly auditioning for the catch-up role. With fresh product inflows and a clean 3,000 handle, it has room to outperform once the panic in Bitcoin cools. Solana stays the high beta test drive, the wrong asset to marry in a risk-off tape, the first one to rip when fear fades. Macro keeps the whole board on edge. Freight costs are ticking higher, growth signals are rolling over, and bond markets are starting to price both slower growth and stickier inflation at the same time. That is stagflation code, and it shakes anything built on stretch valuations. Bottom line for the weekend: surface fear, buried opportunity, fragile tape, strong long-term structure. Smart money studies the flows, keeps powder dry, and waits for the tourist to throw away good assets at bad prices. Engines hot, safety off, let it rip.